Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Heather, Self and Roger Holman.
Welcome to The Tax Factor, your weekly roundup of the latest developments in UK tax. As seems to be increasingly common, it's a busy week in tax. It's beginning to look as if Prime Minister Keir Starmer might change his mind about winter fuel payments. And meanwhile, Deputy Prime Minister Angela Rayner has had a leaked memo with some suggestions for Rachel Reeves for the next budget. There's also been a recent surge in UK inflation, reaching about 3.5% in April. So it looks as if the government is still dealing with the fallout of its autumn budget. I hate to say I told you so, but we did. Nimesh and I both warned that the budget would reverberate right up to next year. Joining me today is Roger Holman, so I'm very glad to welcome back the bearded man. Roger, do you think perhaps Rachel Reeves might think about a beard tax? There was one, I think, in the 18th century in Russia. There are rumours that Henry VIII had a beard tax, but apparently there's no record of that in the National Archives. Is it time for a beard tax?
Well, personally, I really hope not, because I think that my splendiferous facial hair might be overly taxed if that goes ahead. Let's hope that Rachel sees sense on that one.
What else have we heard that Rachel Reeves might or might not be doing, Roger?
Well, you did mention Mr. Starmer's potential climb down on the winter fuel allowance. There's also quite a few other bits and pieces being floated around the press at the moment. There was talk of ISA limits being reduced, but that's not actually really accurate, is it, Heather?
Well, on the ISA limits, I think Rachel Reeves has now said she's going to keep the £20,000 limit, but there are suggestions that what she might do is reduce the cash element of that. They seem to be trying to push people to invest more into equities. I have to say, if somebody's got a cash ISA and suddenly you can't put as much in, I can't see that leading to them putting money into equities. My 87-year-old mother has got a cash ISA. She's not going to start investing in equities suddenly.
I think that's probably right. And I mean, equity investment isn't in the lifeblood of British savers, but we'll wait and see how these ISA limits may look come the autumn statement. Other things that have been talked about, obviously, Angela Rayner had sent this secret memo to our good friend Rachel Reeves, talking about lifetime allowance for pensions, dividend taxes, maybe some higher taxes on banks, and maybe another change to the tax on AIM shares. I mean, this is change for change's sake. I think when we're looking at taxing AIM shares, the value of that to the exchequer has got to be pretty minuscule.
It's all tinkering around the edges, isn't it? And it won't do much for making the tax system simpler. For example, the dividends, people get £500 tax-free dividend income. And that really just saves an awful lot of people who've still got leftover shares in things like British Gas and BT from having to report tiny amounts of dividends on their tax return.
Yeah, I think Angela maybe should stick to her brief of being the Deputy Prime Minister rather than trying to be the Chancellor.
Best suggestion I heard was one that you spotted, Roger. Apparently somebody suggested abolishing income tax altogether.
I actually really agree with that as a suggestion, as does the OECD, the Organisation for Economic Cooperation and Development. Their thinking is actually that income taxes are a disincentive for providing growth to an economy. All taxes should be based on capital taxes. The biggest problem with that, obviously, is wealth tax is incredibly difficult to actually enforce, isn't it?
I can't see this Chancellor getting rid of pay-as-you-earn or more broadly self-assessment anytime soon. It just brings in too much of the total tax take for the UK. And in fact, of all the things we've heard about, they're all relatively small possible changes. And the big complaint I had at the last budget was that there wasn't a strategic vision. I would really like to see Rachel Reeves say, this is where we're going and this is how we're going to get there. But we're still 5 months away from the next budget, and here we are already talking about what might be in it.
Well, it just gives us some extra things to talk about on the tax factor.
Certainly does. Meanwhile, there's a couple of reports on HMRC that have been released recently. One from the National Audit Office dealing with the question of tax on wealthy individuals. What did you think about that one, Roger?
It's like always, they release these reports about wealthy individuals and how much tax is being avoided by wealthy individuals, and headlines are grabbed, and newspapers love to try to attack either HMRC or the wealthy individuals, depending on the newspaper you're reading. Actually, as with all things tax related, it's hellishly more nuanced than just looking at the simple statements on the headlines. I mean, wealthy individuals avoiding tax is probably the same as everyone wanting to avoid some tax where they can.
What I thought was quite interesting, there were some quite sensible suggestions, I thought, in the NAO report about HMRC possibly doing a bit more segmentation of their wealthy clients, in that they class people as being in this wealthy group if they've got income of over 200,000 or assets of over 2 million in the last 3 years. And while that certainly is a relatively wealthy group, quite a large proportion of those will still have relatively straightforward tax affairs. So high earning accountants, lawyers and the like could well be in that category, but might just have pay as you earn income. The area where there perhaps should be more real focus is on the ultra wealthy, those perhaps at incomes or assets over in the millions rather than the hundreds of thousands.
I think that's right. And I mean, we see it all the time that HMRC don't necessarily understand the tax affairs of the really wealthy people. Many years ago, I had a client who, well, I won't go into that one. It's a bit dull.
That's a shame. I was quite interested.
Oh, right. Okay. I'll carry on. Many years ago, I had a client who was a serial CEO of large power companies, and he had many savings accounts and would quite often forget that he'd put 50,000 into this savings account or 100,000 into that savings account. But the individuals at HMRC didn't quite understand that when you're getting paid £5 million a year, 50,000 and 100,000 isn't necessarily the same as it means to them.
Really good point. At the other end of the spectrum, one thing that this report did say is that the compliance yield HMRC have achieved was 5.2 billion, which had more than doubled from the 2.2 billion in 2019-20. And while that's obviously good news and HMRC doing their job, they then commented that perhaps that means that HMRC are underestimating the amount of avoidance. I think what they're overlooking is that the amount collected in any one year might relate back to several years in the past. And in fact, the biggest individual settlement in that year, we know, is the 652 million that Bernie Ecclestone paid to settle his long-running investigation covering 18 years of tax liabilities.
Yeah, I think a lot of these things get, again, swallowed up in the headlines and not really proper information being given by any of the media outlets. Thank goodness for us on Tax Factor.
I was going to say, we just need to get them all to listen to us. The second report that came out, I think a couple of weeks ago, but I don't think it's been covered by our colleagues. They clearly couldn't be bothered to read the whole 56 pages, is the Public Accounts Committee report on HMRC. And that, again, is quite interesting. It's got some comments about the increasing complexity of the tax system. So how many tax policy measures do you think there were in the period from 2022 to 2024, Roger, without looking at your briefing notes?
Well, must be about 50, surely, Heather?
240.
That's insane.
And you can't really blame HMRC for that. It's the politicians who keep making things more complicated. Perhaps we could have something called the Office for Tax Simplification. I don't know.
That sounds like a great idea, Heather.
It does, doesn't it? The other areas which the Public Accounts Committee mentioned was the issue of falling trust in HMRC, and we've talked before about the issues about customer service, but also, interestingly, some concerns about HMRC's computer systems. The HMRC are going through a major upgrade, but guess what? It's taking longer and costing more than they thought it would.
Maybe if the tax system wasn't quite so complicated, they wouldn't have to have such quite complicated computer systems.
Very true. Turning to something different, you mentioned a client of yours who was a CEO of numerous power companies. As it happens, I used to work for a power company. I used to work for Scottish Power, and they've just had a tax case reported from the Court of Appeal. The decision actually came out a few months ago, but I only saw it reported quite recently, so I'm going to cover it now. This was a case where Scottish Power had got things wrong and admitted they got things wrong. There was some mis-selling, there was some failure to deal with customer complaints properly, and Ofgem, who are the regulator regulator investigated and told them that they needed to improve their systems and pay compensation. Scottish Power broadly held their hand up and said, yes, we got it wrong. They did improve their systems. They negotiated with Ofgem so that in the end, Ofgem fined them the grand sum of £1, but Scottish Power agreed to pay 28 million, either in compensation to customers or to charities such as citizens' advice bureaus that could help customers in the future. So yes, things had gone wrong. Scottish Power did their best to put it right. And what they ultimately paid was a compensation settlement. Now, HMRC came along and said, aha, you've paid a penalty for wrongful behaviour. You can't have a tax deduction. And Scottish Power said, oh, yes, we can. And HMRC said, oh, no, you can't. Scottish Power mostly lost at the first tier tribunal. The first tier tribunal agreed they could deduct about £500,000, but not the rest. At the upper tribunal, they lost completely. And that's due to quite long-standing practice that anything in the nature of a fine is not deductible because it would go against public policy. If you have a system where people breaking the law or a regulatory regime receive a fine, then that fine is not deductible for tax purposes. And quite often there's another hurdle in that the fine is not incurred in the course of a trade either. So you fail at the first level that you haven't got something which is for trading purposes. Anyway, Scottish Power kept arguing. They said these fines were incurred in the course of their trade. And they also argued that although they agreed to a settlement in lieu of a fine, it wasn't actually a fine, and so there wasn't a policy reason to disallow it. And the Court of Appeal agreed with them. They said that it was quite clear that if it was a fine for breaking the law or a regulatory regime, that shouldn't be deductible. But if it's an amount which has been negotiated in settlement, there's no legal rule not to disallow that, provided you satisfy the basic rule of it being for trading purposes. I think that's a good answer. And I think although it was a very specific regulatory thing with Ofgem, I think there are wider implications for businesses. Generally, fines are not deductible. There was a case a few years ago about Securicor trying to argue that parking fines were incurred in the course of their business when they parked on yellow lines to drop off cash, and they lost that one, I think. But if you've come to a settlement with a regulator or anybody else, then the settlement amount ought to be deductible. So it might be useful to other people as well.
So I think, putting that simply, if it looks and smells like a fine, it's a fine.
Yes. Always keep it simple, Roger. And finally, Roger, do you fancy playing at being the Chancellor yourself?
Well, if people have listened to my previous podcasts, they may have heard me banging on about various tax measures and policy decisions that I think should be done and perhaps haven't been. So I've always done a bit of armchair chancelling. But now the IFS have actually released a Be the Chancellor tool. I think we can possibly put a link to it on our footnotes.
What they've got is a computer model of the economy, setting out what all the current amounts are that the government is spending and raising from tax, and inviting people to have a go and see how you would balance the budget. I did try having a go this morning, and actually I came up with quite a good answer. I managed to give Rachel Reeves a little bit more headroom on her debt limit, and I gave some more money to HMRC and some more to defence because I thought we needed that, and I paid for it by putting a penny on income tax.
I had a little play, but I ended up being about 140 billion in the red, so I possibly wouldn't be a good Chancellor.
We'll just call you Quasi.
The Tax Factor from Blick Rothenberg.
Well, Roger, I think that's about all we have time for today. If you've enjoyed this episode of The Tax Factor, I'd like to recommend the latest episode in our Brave Business podcast series presented by journalist and broadcaster Declan Curry. I'm one of the founder members of Women in Tax, so I've always been a supporter of business entrepreneurs, and this edition looks at the topic of female entrepreneurs. Joining Declan are Sarah Austin, founder and managing director of the Lloyd's British Business Excellence Awards, and Sam Smith, co-founder of Superscalers.
Like The Tax Factor, you can find Brave Business on all good podcast platforms or our Blick Rothenberg website. Next week, it's Nimesh Shah and Tom Adams. Nimesh is going to be fresh back from Miami, and Tom is always very stylish, so it might be our own little tribute to Crockett and Tubbs.
If you're under 40, you might have to look them up. Goodbye from me.
And it's goodbye from me, and have a great bank holiday weekend.
That's The Tax Factor. If you enjoyed The Tax Factor, please like, share and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.